Hello traders, good afternoon. My name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and welcome to a daily analytical report with Alpari. Today we started. It should be quite interesting week. So we started getting ready to the important data that will be shown this week. First, overnight, we had the interest rate decision from Australia. Rates remained unchanged. And this brought a little bit of volatility, increased a little bit of volatility on Australian dollar. But more or less we are in the same place as we were before the interest rate decision. Today we had factory orders from Germany, which usually are not very influential, but we had a huge drop, as I will show you now. We had a huge drop in that number. Minus 2.7% was expected, and we got minus 7.4. That is a significant drop, which is holding euro relatively low and is stopping indexes from rising at the moment. Also, what we had just recently, we had GDP from Eurozone, which came according to expectations. And as for today, the calendar won't be very busy. I will show you the calendar for this week, what we should expect. Tomorrow, obviously it's the first week. It will be first Friday of the month, so we will get non-farm payrolls, which will be shown on a Friday. What we will have as ECB decision on Thursday, very important event for euro, especially for euro. Now euro is closed, euro dollar, especially euro dollar is closed in the range, and in my opinion they shouldn't break either resistance or support. Now the range is 130 pips, so most probably the price will stay in the range till Thursday, and after Thursday, on Thursday we should expect a breakout caused by maybe not the rate decision itself, but by Mario Draghi and his words during the press conference. As non-farm payrolls on Friday, on Wednesday obviously we'll have ADP, so the first number from the private company, which will help us to estimate more or less if we'll have a beat or a miss on Friday. Overnight, pack of data from China about their exports, imports. Significantly, most recently we had the first increase in FX reserve in China, first increase in I think 9 months. And apart from that, not much will happen, but obviously ECB and non-farm payrolls should be enough for every trader, because it will be very influential data for us. Let's see how it affects the prices on the market. First, we will start with euro dollar. As I said, euro dollar is closed in a range. The closest resistance is here, 1.0630. It was tested 3 times, and the closest support is 1.049. Which was tested twice recently, and as you can see the range is 130 pips. If they will manage to break the resistance, that will trigger a buy signal, and that will create an inverse head and shoulder. It will help to create a right shoulder of the inverse head and shoulder formation. and breakout of the support will deny this formation and should trigger a movement to this support located on 1.0360. Alright, so breaking the blue area can trigger 130 pips a downswing, and breaking the orange area can create a 200 pips upswing. So that's the situation right now on euro dollar. On euro dollar, we're having a wait and see approach, right? Next instrument I would like to tell you about is euro to Japanese yen, where we're having a bit better sentiment than on euro dollar. Why is that? Because we do have an uptrend here and we do have this wedge. Wedge is a trend continuation pattern, and we broke the upper line of the wedge, which is here. So that in theory triggers the buy signal. What is more, at the end of the wedge, what we have here is an inverse head and shoulder formation which bounces from a horizontal support. And we also had a breakout of the neckline, so it also triggers the buy signal. So we have a double buy signal from those two breakouts. And actually, you know about that because we were talking about that last week when the price was somewhere here. We said that price getting there 120 pips higher to this horizontal resistance is very, very probable, and it should happen, and it happened. So another good analysis for Alpari team. And as you can see, this contact with this level resulted with retracement. Now the price is heading a bit lower, but the sentiment is still positive. Why is that? Because we do have, in the short term, we do have higher highs and higher lows. Higher highs and higher lows are typical for an uptrend, obviously. Another instrument, the last one, I prepare for Trading Sniper because those three euro dollar, euro to Japanese yen, and silver were covered in our Trading Sniper video, is silver. Silver, which in the last week received this heavy blow, declined few percent. And as you can see, they broke the mid-term, short-term uptrend line, and they targeted the long-term uptrend line. The first contact with this resulted with a bounce, and the price managed to create a quite long tail on the weekly candlestick. But now this level is under the pressure one more time, and it creates a chance for a breakout. But look, if we measure all uptrend here, all this upswing, we can see that we didn't even retrace 38.2% of this bullish wave. So always when the price is above 38.2%, it means that this trend has higher chances to be continued, right? It's like well, at least for me, and I'm showing you that it works all the time. For me, it's like a magical value that protects the trend from the reversal. So as long as the correction is not bigger than 38.2% of the main bullish wave, this is just a correction, it's not a reversal. So in my opinion, those lower prices, well, price getting there to 38.2 wouldn't be a surprise, right? Also, next to a little bit lower than 38.2, we do have a neckline of the inverse head and shoulder formation. So price getting there would create a great buying opportunity. Obviously, before you buy, you need to wait for a price showing you the willingness to reverse. So you would love to wait for a bullish pattern, for a bullish reversal pattern, for a bounce here. If the price will get there, don't buy straight away because you have no grounds to buy, right? You only have a price touching the support. In order for the support to work, you need to see buying orders there, and you need to see price being lifted higher by the buy orders. So first you need to wait for those buy orders to be activated. That is why it's always better to wait for a reaction of the price on this on potential support. If I will see a bullish pattern here on this horizontal support, that will be a buy signal for me. Next instrument, but I have to log into the other account, is oil. Oil is more or less similar to euro dollar right now in terms of that we have a side trend. But the side trend is much longer because it started at the beginning of December, where the price is more or less the same. As you can see, we are exactly in the middle of the recent sideways trend. So traders bounced from the local resistance here on 57.4. They went to the line connecting recent higher highs, being the lower line of the sideways trend. They bounced from it as well, and now we are exactly in the middle, and the chances for either an upswing or a downswing are more or less equal. Now, I'm bearish on oil, but I need to acknowledge, I need to know that it can be an ascending triangle formation, right? Because we're having more or less a horizontal resistance and an uptrend connecting recent higher lows. An ascending triangle in the uptrend, which started here in the middle of November, suggests that the pressure on the resistance rises and there soon should be a bullish breakout. It's a contradiction to my general belief, but that's what traders do. If the price is showing them that their belief is not working, they shouldn't trade it. And if the signals in the opposite of their belief are strong, they should consider that and trade it, even if it's the opposite. Because even if you're somehow biased towards your opinion, towards your view, so if you can see signs the price doing opposite, it means that they are very strong, because usually we tend to ignore signals which are against our position. So if you see them, it means that they are very, very strong. Okay, next instrument I would like to show you is euro to Australian dollar, which had an excellent end of last week. Monday and Tuesday is a little bit worse, but it's just a normal correction. As you can see, the uptrend started at 22nd of February. Bullish wave correction, bullish wave correction. What we should have here now is an upswing. As you can see, here is the reaction, or maybe on M15 after the rate decision. We dropped a little bit, then we're back. So as I said, we're more or less on the same place as before the decision. What is price now creating is a flag formation. Flag is a trend continuation pattern. Trend here is positive, so we should see a bullish continuation. Let me show you one thing. If this is, for example, we can measure this correction. No, this one is a bit longer, deeper, so there is no correction equality pattern, but still. What about Fibos? Fibos are not so good as well. We almost touched 38.2 Fibonacci level. The price retraced a little bit faster, but anyway, once we will be able to break the upper red line, that will be a buy signal. In the long term, the sentiment is negative, but that's the first sign of the possible reversal. Here on a daily chart, we do have two hammers and then a bullish candlestick, strong bullish candle. So with this setup, what I'm seeing here in a midterm is the price advancing 180 pips higher to the first horizontal resistance. That's my view on euro to Australian dollar. And we had this position on our live trading account. It's now closed after this retracement, but we had a long position here. As we had a short position on American dollar to Mexican peso, you could see our tweet on our Twitter account that we are strongly not advising, because we cannot advise you anything, we cannot recommend you anything, but our view was strongly bearish when the price bounced from this horizontal resistance, which was previously a support. Right, so this was a support, the price touched that as a resistance, and then we had a short position here, which was closed not so long ago. Now what we are having is the price bouncing from the lows from the support created by the resistance from February 2016, from June 2016, and from November 2016, and now we're testing this level as the closest support. First, what was the first reaction? First reaction was a bounce, naturally, but now the price is still pushing lower. Once the price will manage to set new lows, that will be a sell signal. So far we stopped on local, not very well. It is strong because the price stopped there, but it's not significant in my opinion. But anyway, we stopped here. It was a support twice. It is a resistance twice. And actually, what I would like to see is the price getting to the trend line here. Which trend line? Will show you better on daily chart. This trend line. Even we can here. Looks significant, doesn't it? So I don't think that traders will miss the chance to test this level. I'm thinking that they will use this opportunity to test this level. Gold. Gold is also having a correction, but I would like to show you one thing. Because we are highlighting four possible supports here, and look, and we highlighted that long time ago in the last week, and look what happened. The price stopped on the first, performed a bounce, then it was broken, the price stopped on the second one, performed a bounce, and now the price is aiming the third one. So those two supports were spotted perfectly and the price reacted on them. So we can see that trading is going technically. This correction equality is no longer on the table. Let me delete few objects from this chart to make it clean for you. Those levels we can remove because I explain you what are those. And now the closest support is this 38.2 Fibonacci level labeled with the green color. As long as we stay above this level, the sentiment here is positive, but again we didn't even retrace 38.2. I think this 38.2 Fibonacci can be a little bit too deep. Okay, can be a little bit too deep, but it's 38.2 Fibonacci level, so we shouldn't argue with this level. I think 38.2 Fibonacci level of the downswing here will be more important than 38.2 retracement of the upswing, right? So we can see that we measure corrections of the upswing and the local downswing and the local corrections of the upswing. Right, so I think that 38.2 from the longer term will be acting here. Obviously, well, the upswing on gold, which started in the middle of December, is very strong. So we shouldn't be surprised that traders want to correct this level. So far, everything is under control. As long as we stay above the green line, everything is under control. Once this support will be broken, buyers can start to worry. Australian dollar to American dollar. Here we also broke the midterm trend line. The price advanced lower. small correction, which on the smaller time frames is a very steep, but anyway it's a flag. It's a steep flag. Most probably we'll have a breakout of the lower line of the flag and a continuation to 38.2 Fibonacci level. That is my scenario for Australian dollar to American dollar. New Zealand dollar to Japanese yen. Here it's a decent trading signal which we are warning you about. We had this support, which after the breakout became resistance. The price created double top formation. There was a clear neckline here, clear horizontal support. Price broke the support, retraced a little bit, then went lower again. What we draw on our chart was a sell stop idea here, and as you can see it would result in a perfect trade. We didn't open this position, if you ask me. Okay, so my scenario for New Zealand dollar to Japanese yen in the long term is negative, but I wouldn't be surprised if the price performed a correction and then a downswing. But generally we should aim, the price should aim this horizontal support here, 77.4. Canadian dollar to Swiss franc. What do we have here? Was a breakout from the symmetric triangle, and then price touched the horizontal support, broke it, and then is advancing higher. So this creates a chance for a false breakout, but for me this instrument is not tradable at the moment. Here I have wait and see approach, what will happen with this support. Canadian dollar to Japanese yen. Our view here was bullish, but the price is not acting like that, unfortunately. They failed to break this resistance. Now they are fighting with the horizontal support again. We thought that this will be a false breakout, and after that the price will advance higher and higher, but it's not happening. Luckily we don't have a position. I remind you that we had a long position here to here, something like that, which gave us significant profits. And now we do not trade on this instrument, but if I had to trade, I would go long somewhere here, and most probably it would be, well, as we can see, for now it would be a bad decision. So luckily that I didn't open this position, but obviously losses are just a natural part of your trading plan. You shouldn't avoid them. You should just focus on limiting the amount of money that you're losing. Focus on money management program, but never cry about losses, which are a natural part of trading. New Zealand dollar to American dollar is still influenced by this false breakout of this resistance here, and now actually we are aiming the lower line of the trend. Here this can be considered as a quite big flag or a wedge. I was having more hopes about that flag, but it didn't work out because the price advanced higher here. But anyway, we may experience, if we will experience a breakout here, that can be a trigger for a bigger downswing. But first, maybe we'll have a bounce from this trend line. We have to watch carefully what the price is doing. That's a good idea for the buyers to take profits, even if they don't want to drag the price, for the sellers to take profits. But even if they will bounce, it doesn't mean that this breakout is off the table. It can still be performed. I wouldn't be surprised if it happened. Euro to British pound. What we're having here is it was a head and shoulder formation, but now it's more or less a symmetric triangle, which creates a great opportunity for a breakout. And actually we're getting close to one, because the price is testing the upper line of the symmetric triangle formation, creating an opportunity for a breakout. The closest support here is this one. Once we will have a breakout here, that will trigger a buy signal, but we have to watch out for a retracement. But The benefit of this trading opportunity is that the first resistance is relatively far away, so even if you will open a long position here with a stop loss here on 70 pips, you still can earn over 140, which makes the profit twice as big as a potential loss. So it makes this risk worth taking, in my opinion. But before you will get a trading signal, you need to wait for a breakout. So far, chances for the breakout there are, but it's not for sure. American dollar to Canadian dollar, they finally, it seems like they defended this horizontal support. The price is coming back inside of the flag. Most probably the price will test the horizontal resistance soon, so it creates a nice opportunity for the short-term buyers. But the risk is actually too high because the price can reverse a little bit without changing a trend, without changing a sentiment. They can reverse just like that because we are quite high and we are after a strong series of the uptrend. American dollar to Japanese yen is maybe not looking so positive as euro to Japanese yen, but it's still alright. What we're having here is kind of inverse head and shoulder formation. We are aiming the neckline. We defended the horizontal support. Once the price will manage to break this horizontal resistance along with the neckline, so once the price will check here, that will be a positive sign and it will create a positive sentiment for buyers. Australian dollar to Swiss franc, what we're having here is a nice upswing, potential correction equality movement. Here is a wedge. Once the upper line of the wedge will be broken, that will create a buy signal on this instrument. Australian dollar to New Zealand dollar, this is a long-term situation. As you can see, the price is aiming now the long-term downtrend line, and it's a weekly chart. Also, as you can see, this upswing in the last 2 weeks, well, last week and this week is just Tuesday. What we are having here is the inverse head and shoulder formation and the breakout of a neckline. The closest resistance is this trend line, but the next one is here. We have to, with the buy signal, we have to wait for the breakout of this trend line. Because this resistance can be too strong as it is present since 2011, so it's very, very important resistance. But once we will break it, we will aim the neckline of this inverse head and shoulder formation, and breakout of breaking this resistance here can trigger a long-term buy signal and can create a long-term switch in the sentiment and Australian dollar to New Zealand dollar. So we are maybe not very close because it's a weekly chart, but we are heading into the direction where the future of the Australian dollar to New Zealand dollar will be decided. And something exotic for you, Polish zloty to American dollar to Polish zloty, where I'm waiting for the same downswing. Those two are the same, so I'm waiting for the third one, or at least I'm waiting for the price to touch the horizontal resistance to the trend line support here. After they bounce from 38.2 Fibonacci level and they bounce from the previous supports and they created long tails here, I am waiting for the price to get here. Also, let me come back to this account where we are having an oil. And before we finish, let me show you, let's say DAX. What we're having on indexes is a bit of correction, but it's not contagious. As you can see, the price is kept even above the midterm uptrend line. The price is still making higher highs and higher lows. What the price is trying to create on DAX right now is an inverse head and shoulder formation. So when they will break the red line, it will trigger a buy signal. when they will break the, let's say, black line, that will be also the very strong buy signal, because this formation is a wedge in a trend. Well, wedge is a trend continuation pattern, so we can have another bullish wave on DAX. So again, the party on stocks goes on. Traders are buying regardless of anything. Thanks guys for watching our daily analytical report. Remember to follow us on Twitter and our website altpari.news, and also don't forget that trading and investment in financial markets involves an element of risk. Now we're gonna have a